What is going on, guys? I am Chase. Welcome back to Intelligent Money Investing, and today we are going to be going over how I get pretty decent returns, pretty solid returns on the Robinhood app doing through stock investing and ETF investing. Now, before we get to going over that, I just want to ask you guys, if you guys find this video useful, please drop a like on it and tell me what your investing strategy is down in those comments below. Really help me out and help out this video, so that'd be awesome. So, if you guys don't know what the Robinhood app is, it's a free trading brokerage app, which means you don't have to pay out any sort of commissions. Like most brokerages will charge like a $5 commission per trade, and that just Robinhood will save you an incredible amount of money. And so you can download it through the link below. We'll both get a free stock, or you can use somebody else's referral link. Does not really matter. Just make sure to use one of those when you sign up, so you get a free stock when you fund your account. Now, over the last year, I've been trading on the Robinhood app for about almost close to a year. I started on April 4th, as you guys can see here. I've made about $500 in the market. It's been up as much as 700, and I've only been down as much as like 30 or so dollars, $50. And that was kind of just been through normal market cycles and pretty good price fluctuations. Now, I'd say 12.5% in a year has been a great return. The average S&P 500 return over the past many decades has been about 8%. And while I know the market has been up a lot in the last year, what I really wanted to get out of this first year when I don't have that much money into the market is mostly just a learning experience. And that's kind of what my strategy shows, because I don't just go into the S&P 500 and invest passively. I kind of spread myself out through a lot of stocks. So I'm going to talk to you guys a little bit about that strategy today. Now, if you're purely going for returns, don't want to put too much effort into your research, and just kind of want to put your money in the market and not worry about it, my biggest suggestion is going to be going straight into the ETFs. Now, if you guys have been on this channel for a while now, you guys know I preach ETFs all the time. Something like VOO or SPY are going to be great. When you're looking for an ETF, you want to make sure you have a low expense ratio, and an expense ratio is essentially what the fund takes out as like a servicing fee every single year of the total money in the market in the fund. So VOO has one of 0.04%, and that's going to be about as low as you can find in the market. So I suggest putting a lot of money into that as an ETF, and that's going to be a great investment for you over the long run, I believe. Even though our market is pretty high right now, it still has potential to go higher with solid fundamentals. Just make sure to not to put in any money that you might need in the immediate future. Now, if you're comfortable putting your money in and maybe not seeing it for the next 5-10 years, then definitely an ETF's a good play, because it's not going to be super risky, and it's just going to be a solid return over the long run, as you're investing in 500 of the best companies in the world, essentially. All right, now, so as you guys can see, I'm not just in VOO, as I just said is a decent strategy for some solid returns, as it has returned about almost 100% over the last 5 years, and that's not even including its 1.74% dividend yield. So what I'm doing here to get other good returns is investing in some individual stocks as well as more ETFs. These first 1, 2, 3, 4, 5, 6, 7, 8. The first 8 on this list are all exchange-traded funds, and essentially that's not going to be a single stock, but actually a basket of stocks in an individual sector or individual group or S&P 500. It's basically a category of stocks that are all included under one name, under one trading ticker. Then I have other stocks like AbbVie here, which I've gotten some of my best return on. I'm up 72.5% on AbbVie in the last year. It was one of my first stocks that I got into and one of my biggest individual investments. It's really traded up to become my biggest investment, and that's gotten me a great return. But with every one like this, there's going to be also going to be stocks that haven't done just as well as the other ones. Like I'm down 7% on Realty Income, because it's a real estate stock, and with the rising rates we're experiencing right now, it hasn't been great for that, because real estate ETFs, REITs are not ETFs, just real estate investment trusts are really debt heavy. So when it's more expensive to borrow debt, it really becomes difficult for these businesses to grow and expand. So that one's lost a few percent over the last year, but the vast majority of my investments have been up for me. Like I'm up 32% on Microsoft, and even companies like Bowsen, which has been poorly performing for me since I bought it I think I bought it around here. I think I bought it around 37 here, and then it went up to 40, and it's taken a lot of stagnation, and now it's up to about $48. So it's really been a great return for me overall. And I'd say just being in the market during the high times has definitely made it easier to get decent returns. And I expect that in the future it's going to get a little bit tougher as really earnings from these big companies kind of need to catch up to the high stock prices that we're seeing now. But when you're in the market, there's always going to be potential to get good returns. So just being invested is going to be one of the important things that you guys have, because over the long run, the S&P 500 over a long period of time has always been positive for people. Even if they invest at a very high point, it's going to get, and there's a crash after that. Eventually, with these strong companies, they're going to come back into the spotlight. They're going to come back and be strong, have good earnings growth, and they're going to make you your money back and also hopefully pay you dividends along the way. So I hope you guys enjoyed this video on how I'm getting decent returns in the stock market. It's been a great ride for me so far, and I'm really glad I've gotten into the market, because you really need to be learning before you have a ton of money to invest, especially if you're kind of like me. I'm still pretty young investing in the market, so only have about $4,000 in total invested. So, and when I have more money to put in, when I'm working a more regular job, then I'll have more and more money to put in, and I'll know exactly what I need to be invested in and what the smart investments are going to be before I put a ton of money in that's going to be like the majority of my net worth into my stock trading account. And because I can't risk such a large portion of my net worth and such a hard portion of my hard earned income on things that I don't totally understand and stock market investing strategies that I'm not fully with. So I hope you guys learned something from this video today. This is just a video of how to really get started in the stock market, how to get some solid returns through ETF and a little bit of stock trading on the Robinhood app. Hopefully it goes well for you guys, and let me know what you guys think down below. Leave me a like on this video if you could, and I will see you in the next one. Thanks, guys.